and I am believing that today is now for us to enter into the real thing, the real stuff. Last week was just to prepare our minds on how you can plan and you can understand at the end of today why it was necessary for us to have that last meeting, because it's all boiled down, what do you have to invest? So today, without much ado, is for us to go into investment proper. So I'm going to share my screen. Here, if you can see that. So today properly is just investment. So what is the aim of what we are having today is mostly we are going to look at different types of investments. So different types of investment, what you are going to go into, and then you are going to look at yourself and look at how do I visualize my ideal possibility? Which one should I go for? How is my world going to change? Or what are the roadblocks to achieving those dreams? And finally, it is easier for us to calculate with our living expenses and what we have to save to make this, to achieve this. So quickly, there is nothing when we are talking about investment objective. These are, why are you investing? So it's possibly some people invest just because they want to increase income. Some people invest because of they want to finance expenses or whatever, maybe regarding a short-term expenses. Some people also invest because of they want to increase their savings. And sometimes it could be as a result, you want to bridge the gap of inflation. Like obviously, things are now expensive after COVID-19 when lockdown. So some people try to make sure that knowing too well that there will still be high prices of things. So some people invest just to make sure that they bridge the gap of inflation. And also some people invest to reduce tax liability. It's obviously that was why I was speaking with Pastor says there are a lot to cover. We have not even talked about taxation. What can you do? So we are not going to look into that today. It could be in the near future. What can you do to reduce how much tax that we pay? Because sometimes some people never understand that when we are asking you to, and we mentioned that last week, when we ask you to pay a tithe at source, it reduces how much you pay for tax. Secondly, have you ever heard about these footballers? When you hear most of them, we say that they are being taxed 40% and above, no matter what they do. But what do they do to make sure that they have much to themselves? You will see each of them have a charity organization, so mostly on their name. So mostly before they take away the tax, they must have willed the money to that charity to reduce how much tax that is going out from their income. I will not go much into details about that, but next time we will look into transaction in its full. What can I do to reduce that? There will still be some of the investment that I am going to mention today that is going to help you to reduce tax liability. So that is why we say we are looking much on investment in its holistic. But the first one, which everyone I know is much keen, is about the first one is property. So property is mostly everyone want to have a house of his own. And I believe that some people are just paying almost £1,000 or 1,200 or this thing on house rent. Why can't I pay that money to myself, to my house? So what can I do? So today we are looking at mostly investment into property. And I'm going to explain to you how you can get into that ladder as quickly as possible. And not only that, there are some of the help, government help, that we don't know that can help you to get into that ladder quickly. So we are looking into that, and mostly people will always say, what do we mean by that? Because I don't have enough money. I will, at the end of this, explain to you. Some people will tell me and say, because of bad credit, I can't go into this, but that is not true. And that is why I will, towards this journey today, it is going to be much on to open our eyes to tell us there are things we can do to establish ourselves in this place. So the first thing is just looking at the property. Mostly it is what is a mortgage, because so everybody here do not, I believe that most people here or who will listen to this do not have 450,000 pounds just to sow into and pay for your house immediately. Nobody have even 200,000 immediately or 300,000 to go into immediately and just pay for a mortgage or pay for a house. Most of us here goes into what we call a mortgage. And the question everybody is not far off. But what is a mortgage? Is what we ask ourselves. So we say that mortgage is a loan designed to help you buy a house. So it is what to help you to buy a house. So when you apply for a mortgage, you need to put down what we mean. You need to put down a percentage of the cost of the property value, a percentage of the property value as a deposit. So we found that the rest of the money you need to buy a new home is covered by a mortgage. Okay. And you borrow this money possibly from a bank. You borrow it. This is what you borrow it from a bank, or you borrow it from a building society. You pay this money every month for a set number of years. So this is what we call the mortgage term. And a mortgage term mostly is run up to 40 years. So for me, I'm telling you, when I was giving Pastor my own testimony, I says, it just remained 8 years for me to finish up my payment. And how old? I am not even up to 48. Let's use that word. I'm not up to 48 years old. And it just by 8 years, less than 8 years, and that's me done. And I also have another house, which as well, that I've already finished paying for. But I will tell you the secret of all these things. But what we are asking is, if you look at where you are, the house where you are, you found that mostly you are more than paying what some of us are paying, more than what we should have paid if we have the house as a mortgage. And that is honestly the truth. But the thing is, before you go into mortgage, you have to ask yourself, and you have to ask yourself different kind of questions. One is, how much you pay back each month will depend on, because once you get into mortgage, it is not just like I finished the message, I finished the whatever thing we have now, and you now begin to say, let me dive into, get into. No, it doesn't work that way. If it is the Bible, I will use the word. It says, who want to build a house first and do not count the cost. So see, if this is just the way, who want to, even if you want to go into war or want to do anything, do not count the cost. So what was it? The first thing you have to do is you ask yourself how much you can pay back each month. It depends on how much you can pay back each month. Will depend on number one, what type of mortgage you get. How much the type of mortgage. There are different types of mortgage. And the different type of mortgage, let me begin to explain it. Number one is we have one we call repayment mortgages. What is repayment mortgages? Repayment mortgages is the one that it is the most common type every people have. That is where you pay a deposit, then you make monthly payments. So you pay a deposit, the deposit could be 5%, the deposit could be 10%. It's just based on the agreement with the bank. and then you pay a monthly. This is what we call repayment mortgages. But the another one we have is interest-only mortgages. So what is interest-only mortgages? This is where I will always tell us, please, most of the time, be careful about this type of mortgage, about the interest mortgage, because some banks and some building society, they will always want you to do interest mortgages. What was interest mortgages? Is for you to pay interest each month, not the capital. So if the value of the house is 1,000 and you're paying 4% or 5% or 10% interest, so they will tell you, don't pay the capital, just only give us the interest at the beginning. Finish paying the interest. If the interest is, let's say you borrowed 100,000 for your mortgage, and then the interest 10% is just say 10,000. Then they will ask you, first of all, you have to finish paying the interest first before you start paying for the 90% remaining, sorry, for the 100%, sorry, 100,000. At that particular rate, I'm telling you the truth, that is not an ideal way, because you just want to make sure you pay off your mortgage at the early time. Number three, there is another one, another type of mortgage. You have to be very careful. I'm just trying to open up this, is the tracker mortgages. What was the tracker mortgages? Tracker mortgages is depending on the interest rates. You could always know every month we found the 𝐻𝐸 or we found the Bank of England will always set an interest rate. For now, it is 0.05%. So mostly that particular one is just based on the interest rate. So every interest rate that is set by the Bank of England, that is what you first of all have to make your monthly payment for. So it depends on its variable. And we have the one we call the offset mortgages. The offset mortgages is the one that will say your savings are offset against the mortgage amount. So meaning that every savings that you have, remember we talked about savings last week, about how to save, what you need to do, and then what you have to do, every savings that you have, you offset it against the mortgage amount. So this means that the overall interest you pay can generally be lower. I love this one. So mostly in the overall interest that you save. So what you're trying to tell them is that you're trying to tell them it is not going to be fees. So you are trying to tell them that for you to offset your mortgage, that every saving, like every year, before every anniversary, what you do is that every amount that you save, you pump it into the capital. That will always reduce your interest. It is a very good way, but it depends on if you have a saving appetite or a saving attitude. And the last one is the fixed rate mortgages that people always go for sometimes, because some people who are low risk taker will always say, please, I just want to be sure of what I am paying per month, whether the interest is going up or whether the interest is shaking or not shaking. All I am keen on is how much am I supposed to pay. So that means it is fixed. But mostly we found that sometimes this fixed rate does not really work out in the normal time this time. All they do is to set it up for a particular period. They can say in first 5 years, it is fixed. Then after the first 5 years, it becomes variable depending on the interest rate, depending on what the Bank of Scotland, depending on inflation, some depending on inflation. So they can come back to you and tell you that this one is fixed at the beginning of the year. So before you decide on how much you have to find out which type of mortgage am I going to get. Number two, how much am I going to borrow? How much am I going to borrow? Brethren, if I can tell you, that is why I said it is more keen that you start early to save. I will explain to you why you have to even start your children, build that to start early for them to pay. I will tell you, I will give you some investment tips on what to do with your children, so that when your child or your children comes to at the age of at the age of 21, when your child comes to the age of 21, he already have started on this ladder. Why? Was because of what you are going to learn today and how you are going to start off with them. Because why I said at the age of 21, at 18, they have a right to access any money, or they have the right to access any money or access anything. But the problem is that mortgage, they cannot give you a mortgage if you don't have a regular income coming in. Because it has to be sure that there is something that is coming in. So for you to depend on that, you have to think about how much do I borrow? Then the next thing you have to look at is the term of your mortgage. It worries me a lot when I see people take mortgages for more than 30 years, getting to 40 years. And when you look at the age, you found that actually they will still take that particular mortgage until they die. It doesn't make sense. How then did you enjoy your old age? That is why you see some people are still working even over 65 and 67 to 70. Why? Was because they want to make sure that the mortgage is being paid for. Reason why we did financial planning last week. And the next thing is that you have to make sure you agree with the interest rates with the lender, the building society. But to be honest with you, the lowest people that when it comes to interest rate are the building society. So, okay, what is the next thing is applying for a mortgage. When you want to apply, for the first house, for your first building or things, all you just need to do is what? You have to, first of all, know your budget. Know your budget. Because I have to be honest with you, you know the society where we are. If you cannot pay and they give you some grace period, what do? They repossess the property. And what is their sense? The money you have paid earlier is all just gone. Know your budget. How much can I pay? How much can I give out? Let me be honest with you. Sometimes some people have said a word to say, because of my credit rating, there is no way I can get into property ladder. But let me tell you the truth. There are some brokers you will go to and explain to them how much you pay. And when you tell them how much you pay for your house rent, they will look for a property for you that you are going to pay less than what you're paying for house rent. Because if you're able, within your condition, able to pay, say, £1,000 per month, those brokers, what they do is they will look at your income, look at your expenses, look at what goes out, and said you've been consistent in paying £1,000 per rent. So they will not look for 800 rent or down that you are able to pay, knowing too well that you're more than able to pay anything less than £1,000. So never ever go with the idea that there is no way that you can enter into the property ladder. Secondly, if you want to go, you have to save up a deposit. Now, can I tell you, one of the things that we did, there are some people in the church that, let me use the church. I don't know where you're coming from. Some people did, some people want to get into the property ladder, and they were struggling to get this deposit. They were struggling to get even deposit from. Do you know what we did? Some of them then gather some trusted people around them and says, can we do what we call, some people call it back home or susu, or what we call this thing, that means a rollover, where each month everybody will bring £1,000. And do you know, it will make you accountable, and it will make you accountable in the sense that because every month, one person will take that whole amount. Some people took, it was 1,000, and we are 2 of us. And so what some people did was that 1,000, every month when you pay your salary, you just give out £1,000. And when you give out that £1,000, remember, to be honest with you, some people mentioned their testimony was that they didn't know that they could save that 1,000 if there is not that particular society. Will I call it a society? And then the next thing is that some people use it, save that money. And when they save it, some people did it for 2 years, some people did it for 3 years, gather the money, and then use it as a deposit. Because why? Was because it becomes the, when the money it comes to you, you know that you have to give out the money. So it is you are accountable to make sure that you don't fail when it is your own time. Do you know that most of these, that was how some people climb up? I knew at least 2 or 3 people who used that as a way to save up a deposit, because they couldn't do it on themselves. Most times it is easy for us to say to ourselves, I am going to save 500 pounds. I'm going to save. But when you begin to receive call or things or comes around, you have no other option than to give those. But do you know when those things come, some people were able, when they don't have, if anybody call you, there is nowhere to get the money. So that is a way where some people can save up to. There are some people save some money for their deposit. So it is based on whatever thing that works for you. But before you apply, make sure you have almost saved up a deposit. So make sure you set up a deposit, which is very, very, very important. So what kind of mortgages? I think I have mentioned that earlier on. I have talked about different kinds of mortgages. Different kinds of mortgages. I've talked about the repayment. I'm not going to repeat it again. Different kinds of repayment mortgages, interest-only mortgages, tracker mortgages, and offset mortgages. You will know what works for you. But then the next thing you have to understand, again, when it comes to getting into property, like buying property first, you have to arrange how long this period is going to be with your lender. For example, when I was about to do mine, because I'm going to use mine as an example, the first thing, sit down with my wife, just look at how much do we have to cut. To be honest with you, the car that I was riding then when we started this is still the same car that I'm riding. I says there is no need for us to have any car. I have finished paying for the finance. I am not moved to buy any other car. What I am keen on is more because of the property. Because of, you have to deny yourself a lot of things. So you just have to think, how long will it be? This is also, you have to think, how long will it take me to dig out just a kind of little deeper into your finance? And for you to do this again, you have to run a hard credit check by yourself. How many of us, I don't know, how many of us always do that monthly? You just try to check, where am I? Am I climbing up on the credit check or this? You look at what are the defaults, what are the distance, because before you go into mortgages, these things will be open. They will come, but before they lend you money, they will have to, which word will I use? They will open you up and begin to tell you everything that you have paid and you have not paid from the time you entered Britain. From the time you enter, they will open up everything you have defaulted. So you just have to run a credit check. Ask yourself, even now, even as you are doing it and thinking or waiting for you to go into that, run a credit check of yourself and says, okay, if I am owing these people, what should I do? I can then start saying, okay, I can pay you £5, £10, £20. And as you are doing that, if you enter into agreement with them and tell them this is what you're affordable, you will see that your credit score will begin to rise. It is very, very necessary before anybody gives you anything. And another thing you have to know is that you have to get what we call a home valuation. So you are not the one that does this. Mostly it is your lender. A home valuation is your lender will need to carry out an independent valuation of the property you want to buy, because obviously once you say, you just have to begin to search for a house, search for a property, search for wherever you want to search for, and then what will happen? There will be an independent, this is what we call loan to value ratio. So what does it mean by loan to value ratio? So I'll bring it up here. there is independent valuation of what is, this is loan to value ratio. What is loan to value ratio? How does it work? Loan to value ratio is the percentage of borrowing you take out against your home. Let me use the word again. It is loan to value ratio is the percentage of borrowing you take out against your home. For example, if you have 180,000 mortgage on a 200,000 house, look at it. If you have 180,000 mortgage on a 200,000 house, then that means that the loan to value ratio would be 90%. I say it here. Okay, let me break it down. Here is how the loan works. You pay a deposit, a property. You saw a property that worth 200,000. And what is your deposit? The deposit you paid is 20,000. So what is the rest? The rest is you get a mortgage. That is the rest you borrow from the bank or from the building society or from anywhere else is 180,000. So your deposit, if you look at it, your deposit covers 10%. Because that is 20% of 200,000. Your deposit covers what? 10%. Meaning that your loan to value is what? 90%. So which is very, 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 very important. Very, very, very important for you to know this. So why do I need to know? Because some people will say, why do I need to know my loan to value? Because the more you can put down as a deposit, the lower your loan to value ratio will be. So it's very, very important that the more, because when you see this, it's easier for you. You know, when you say 20,000, I'm giving 20,000, some people look at it, it is so big. But when you look at loan to value this thing, you found that it is only 10%. That means that if I need to reduce the amount I'm going to borrow, I have known that it is 90%. So I can say, let me just take off out 55% and reduce this thing the more. And secondly, every lender always look at your loan to value before they will decide if they will accept your mortgage application. So the lower, the better. So the lower, the better. So every particular listen, they will always look at it before they look at your mortgage application. So your LTV will come up whenever you, let me explain it again. If you want to remortgage, for example, you have a house now and you want to remortgage, they will always look at your loan to value ratio. And that helps you. Or if you're a first-time buyer, it will always, it is always the lower your loan to value ratio, the higher your equity in a property. So that is why the value, one thing you got to understand, the value of a house can fall and can rise. I'm not going to go into details about this, the value of a house can rise and fall. So that is why if the value of your home is lower than the amount you still have remaining to pay a mortgage, that means you are in a negative equity. Let me explain. There are some people who have had a house for more than 10 years, but there is no maintenance of that house. The house is still the way it has been. They've not done anything. Maybe, for example, when I got into this mortgage, there was no front. I have a front garden, but nothing was done on it. So what do I have? I have to do a driveway so that I can come in. The back, nothing was done on it. But do you know, anytime you do anything on your house, check the value. You will find out that the value will always appreciate. Sometimes the value of a house can fall if as a result of that. And if you have not had time to improve or do some maintenance or do some work in that house, and possibly it might be as a result of inflation, you could find that your equity on that house will always be low, because what you're giving is less than what you are receiving. So that is why sometimes it makes it harder to sell or harder to remortgage. If you don't maintain, and that is why I said this loan to value is what sometimes you find some people, sometimes it becomes harder when you want to sell the property, or sometimes when you want to remortgage. And these are the reasons why some people say, no, we can't do this with you, because they want to see how has the house appreciated or how has the house fallen within that area. Okay, quickly, the next thing any other person thinks we now have to look into is somebody may be asking and saying to himself and says, I want to enter, but it is hard. I have tried to save, but it is hard. Are there any help somewhere else? Is there anything that can help me? Is there anything government have been so nice enough, to tell you the truth, have been so nice enough because they want to get people into the what? Into the ladder. So there are government schemes for every first-time home buyers and existing home buyers. So what are the schemes? And today I just want you to write it, and just if you can write it, how can I have tried to save up to, it's difficult, but are there schemes that can help me to go into this thing? So number one is the first scheme that the government has introduced is a scheme we call LISA, which is Lifetime Individual Savings Account. This is not ISA. This is Lifetime Individual Saving Account. We call it LISA. And what does the government does in this? Government does in this is that you can use a LISA to buy your first home, but it must be a property less than 450,000. Anything above 450,000, you cannot get it with LISA. So, but anything less than, or you can save it for later life. What is that? In LISA, you must be aged between 18 and 39 to open a LISA. So this is another thing that tells you that you have to introduce to your children once they are 18. That is the first thing, is you can put in up to 4,000 each year. Do you know that it is tax efficient? And how is it tax efficient? The government will always add 25% bonus to your savings up to a maximum of 1,000 a year. So look at it. If you can put it 4,000 each year, you put it until you are 50. Once you are 50, you are not qualified for this. That means obviously by that time they are looking at you and says, property is not what's supposed to be, because this is tax efficient. So what you do is you must make your first payment into this ISA before you are 40. So how do you do? Every year, and you know that every year, so what do you do? Every year, you pay almost 4,000 into this lifetime in ISA. And when you do that, government adds 25% to your savings. So that means if I pay 4,000, add 25. So that is what, and it is tax efficient. So if you are buying with another first-time buyer who has also a LISA, you both can also use LISA towards the same property. So if your wife has LISA and you too have LISA, so that means that both of you can combine together to use LISA towards the same property. Government have added something. That means you have 8,000 now, and then from 25% added all over, which is up to a maximum of 1,000. So that means you have extra from the government. But let me be honest with you. Be aware there is a penalty for taking out money out of LISA if you are not putting it towards a deposit or withdrawing it after age 60. Because it's easier when you tell people, LISA, but the thing is that when some things push you, you say, I have money in LISA, let me just go and withdraw it. But the thing is that there is a penalty for it. Okay, the next one is there is also another scheme from government which we call Help to Buy ISA. That means this one is not the ISA of £20,000 that you pay, each month. This is a different, this one is help to buy ISA. If you open up a help to buy ISA before the end of November 2019, you can still use it. That means it is no longer in existence now. You can use it for a deposit if you buy before December 2030. So like the lifetime ISA, this account allows you to get a 25% bonus also on your savings, but you are limited to saving £200 a month instead of 4,000 a year in the lifetime. Okay. Let's go further. Government scheme. This one is only for England because you guys are from England. That is why I'm bringing up this. That is what we call equity loan. Okay. So I don't want to bring, because this one differs from Wales, differs from Scotland, differs from other places, Northern Ireland. But because you guys are in England, that is why this one is only for the first-time buyers in England. So this is available for the first-time buyer who want to buy a new build. Look at it. I want you to get the word. A new build house within the relevant regional price cap. So mostly, you know, some people like, it's a new house, it's a new build, that is what I want. So this kind of scheme is what can help you into that ladder. But this must be used, this must be used to buy a main residence. So that means you cannot use it for let to buy property. You cannot use it for your second home. It must be your main residence. So for this particular one, all you need is a deposit of 5%. All you need is a deposit of 5% of the purchase price. So you can borrow up to 20% or 40% in London. If you are central in London, that is, you can borrow up to 20% or 40% if you're in London of the purchase price as an interest-free. So that means interest-free, look at it, interest-free equity loan code. So meaning, I want to get this thing very clear, that means that you will not be taxed, you will not receive any interest for 20%. Remember, in mortgage, you pay interest, but this one is 20% of the purchase price. That means you will not pay interest on it. 40% if you're in London. So this is just what government is doing, trying to see if people does to help people in London. So that is why you could say, I said this scheme is only available in England only. Okay, because we are, so what you do is that you don't pay interest on the equity loan for the first 5 years that you have taken it. So you start to pay interest in year 6 on the equity loan amounts you borrowed. So the equity loan payment can interest only, so you don't reduce the amount you owe. So it is very, very clear that you just have to understand help to buy equity loan. That is mostly for England, for where you guys are. Then the second one is fourth one is help to buy mortgage guarantee scheme. So this one was announced in 2021 budget, so recently. So this one is mortgage guarantee scheme. It's still all part of the things to help people to get into the ladder. That is, this one is based on, it offers lenders the option to purchase a guarantee on mortgages where a borrower has a deposit of only 5%. So what does it mean? It means, like, for example, there are some schemes that you know that there is always a guarantor. So you have 5% only. That is the only thing you have is 5%. Maybe possibly the mortgage deposit could be anything, but the guarantee is just to try as much as possible to make sure. It says in that the guarantee compensate mortgage lenders for a portion of net losses suffered in the event of repossession. So this one is just trying to protect you if you are not able to pay. So the guarantee applies to 80%. It is not on the deposit, but it guarantees on the 80% of the purchase value of the guaranteed property. So covering 95% of these net losses. So all you have as the lender or as the person is that you retain a 5% risk in the proportion of losses covered by the guarantee. So what does it mean? That if you are not able to pay, you are not able to pay a mortgage within the time. So the only thing that means that you can only lose 5%, but 95% is covered for you. Okay. So these are all the things they're trying to do just to help people. Things that there is one that I know that many people know much is the shared ownership, or we call it shared equity. So shared equity is mostly, sometimes it happened in the past, and I know friends who have used it. They were using it sometimes in the past. You can remember, I think this is crap. In the past, people who live in the council house or in the housing association can easily as well just buy over the house where they are staying from the government, but it's going to be shared equity. So shared equity is possibly, if you can say, okay, let me buy off 20% equity of the house, and then 80% remains with the government. You can slowly be buying it off from the government. So this is what we call shared equity. I am so shocked that most of us and many people miss an opportunity. Do you remember there was a time, is it 3, 4, 5, or I can't remember, 5 years ago or 6 years ago, there was a kind of an open window where people who are living in the council house were asked that you can buy the house. And many people, our people, we don't know. And many people miss that particular window. And I didn't know what happened. It didn't even stay long. They close it again and says, no, it is no longer happening. When some people's eyes now open. Why some people were keen on, let me be moving from council house, and they are looking for new build of council house, new build of housing association, instead of looking for a house of their own. Before they could ever find out, the thing is already close. But the thing is, there are still, if you need a mortgage to pay for your share, which can be a quarter or 3/4. So that is mostly for the shared ownership. And lastly, there are one that people still don't know. There are older people. Older people people don't know this. That older people, there is a scheme for them to still get their own house that government is doing. So when you look at the older people, you can get help from another homeowner scheme called Older People Shared Ownership. But look at it, if you are age 55 or above. So the age bracket for this one is the people who are 55 years or above. So how does it work? It works in the same way as the general shared ownership scheme. That is the ownership scheme. But you can only buy up to 75% of your home. Do you get this? So you can only buy 75%. So you can't buy 100%. You can't own the whole house by yourself. So only thing that you're limited is that you only buy, once you own 75, you won't have to pay rent on the remaining share. Okay. So that's thing is, I have tried to explain to you, to tell you, open up, and I believe there will be more questions that should be coming, because this is the area that I know that everybody wants to keep. But then there are people here who will be saying, I have my own property. There is no need. What do I need to do? But there is something I have to tell you. There is also, you can buy to let. And there is an opportunity for you to do that. So you can buy, there are a number of things. You can buy to let mortgage, because see, every one of us last week, what we talked about was last week on how to make income, how to get that. And what do you do when you want to buy to let? Check your eligibility to apply, okay? Find out how much you could borrow, find out the cost of buying, running, and maintaining the house, on how to buy to let property. But there is something I want to tell you. If you are in England and you want to make money, you want to have another property, you don't need to stay in England and says it is only that place that is where you have to be looking for a house. Do you know, let me be honest with you here, Scotland, it is cheap. I have a cousin, I have an in-law who is in London, but do you know she bought 2 houses in Glasgow? She has 2 houses in Glasgow. Because why does she have houses? Because it is very cheap. And let me tell you, for as many that want to get more stream of income or want to invest into more property, and you're looking at, what do you need to do? You don't need to look for a furnish or this thing. All you just need to do, if you want to get a cheaper one, go for a repossessed house. Can I tell you, it will shock you, 2-bedroom house that the person bought in Glasgow was not up to £50,000. 2-bedroom, when I mean by 2-bedroom house, it was not up to 50,000. The second home. So you can be staying, say, to get this thing, you still the same thing. And some people will be asking me, what about the void period? The void period, if I have a house now, and then if I have a house, and then there is nobody living in it, so that means I'll still be coughing out money from my income to pay for that. Let me give you one tip. Do you know what to do? Do you know what some of us do? The second home or the second house, all you just need to do to make sure there is no void and there is nothing like you thinking of who am I going to rent it into? How do I advertise on this thing? Give it out to the housing association, give it out to the council. The council will source out the person to live in it. And what is your own? All you know is that every month money is coming in from the council into your account because they are the one managing it for you. It's very simple. Very, very simple. And that is why you see some houses, some house council or housing association, you don't know that it is owned by an individual, but the person will it out to the council, so will it out to the housing association. And the thing is that every month the person is just receiving money. And the thing is that the person is not even worried about. The person is not worried about how the income. And do you know what is that? As the money, that flow is money, you can also have more money to pay off for where you are. There are some people who have this multiple property. And as they have multiple property, they use the money they get from this thing and they are paying off the house where they are. We should be wise. Okay? Quickly, there is no time. I'm just like rushing it again. There is also another part of property which I have not talked about. I have talked about, yes, getting into mortgage, getting into this. But there are some people who don't want to be landlord, who does not want to, but they can invest into real estate. So you can invest. So what does it mean by real estate? Real estate is not just, it is just your money. You invested your money into a property. There are companies that does that, but I'm not going to overflood this mostly. So when we talk about real estate, we said real estate involves the purchase, ownership, management, rental, and or sale of real estate for profit. I will explain this to you, what I do that gets me money. I will explain to you quickly. Because one thing is that in real estate, is that how many of us, let me tell you, how many of us know that in Nigeria, if you're from Nigeria, sorry if you're not from Nigeria, apologies, but I'm just like making an instance so that some people will just know this. Do you know, like what I did was in Nigeria, there are these companies now that involves in real estate. Do you know what they do? I have never been, to be honest with you, I don't know much about, I don't know much about Lagos. There are lands and properties, so they involve in real estate. So they have a land, a property, the land, they will just go, what those real estate people do, they will go and buy the land. and they want to build a real estate, and they'll be saying 300 square meter is 600,000 naira. And then what do? I will use my money. Some of them, what they do is that you have to pay monthly. 600,000. So 600,000, it is up to 1,000 pounds. So what is 1,000 pounds? 1,000 pounds is less than, see it is 1,000 pounds is what I will give them to have that land. Do you know that sometimes you pay it monthly, 100 pounds, 200 pounds, but the land belongs to you? If I can give you a tip, go and Google P1. That is P for Papa, W for whiskey, A for apple, N for November. P1. Very trusted company in Nigeria. And they will tell you how you can. That is, do you know I have 3 land or property? That is what I mean by not a building. 3 lands in different places. I have in Lagos, I have in the East, I have also in the district. And do you know sometimes you tell them and said, after I pay for this, they will give you the certificate of ownership. It is your property. It is your own land. And when they do that, the next thing is, if you want to build on those land, it is up to you. But do you know sometimes some of us, what we do? There is one, they will say it is 2 million and we pay it monthly. When I finish paying for that, I will tell them in 6 months' time I want to pay it. That 2 million will generate 4 million or 5 million for me. And how much gain did I get? 3 million. What I'm telling you now is you can write this company and just check up with them. Because before I could even trust them, what I did was I have to send people to go and find out more about them first. So in real estate, that is why you found that in real estate, what some people do is that property values increase due to this, and you can also generate income. So that is what you can see on that listing. And you just buy a property and you can resell it. There is no time for me to go into real estate because mostly it is capital expensive. Let's look at the second. I've talked about property. There is a lot. I know there are questions to come. What is the next one investment some people do is ISA. You know it very quickly. Investment, individual savings account. I'm going to run it quickly because my time is already gone. That is why I say this is where the real this thing is. It's not like last week. It is where the written there a lot of I can go on. In ISA, there is quickly, all of us know about ISA. But can I advise you, and can you know, please, if you don't have it, open it up because it saves you tasks. Very task efficient, very, very. All of us are looking at, we want to save money, we want to do this. There are things you can do. Just make sure. And if you can look at what is on the slide, I mentioned here, you can open an ISA for the children. Can I be honest with you? That I started with 50 pounds for each of my children, and there are almost 5,000 pounds in that place for each of them. And not only that, I'm not trying to brag, God forbid, but I'm trying to tell you, do you know where my eyes is? My eyes is, I can't wait for them to reach 18 or reach 21 and start something doing. And then I will take that money and say, well, property, even if it is closer to where it is me, I will say that is, you are building an investment for these children. And it is task efficient. And you know that for you, what you just need to do for each year is 20,000 pounds that you have to invest in ISA. If you open for a child ISA, it is 9,000 pounds. There is no time. And that is why I said now I am going to be rushing. You know much about ISA, you can Google it. What is another thing that so I talked about? There are 4 types of ISA: stock, cash ISA, stock iShares, innovative finance ISAs. I have initially talked about lifetime ISA, if you can remember, as part of the scheme. But there is no time for me to go into details much about it. The last one I'm going to talk about now is insurance. How many of us have life insurance? I'm not talking about if you go into your work will tell you, yes, one of the benefits they give you is life insurance. That life insurance does not cover you outside the employer. Life insurance I'm talking about is your own personal life insurance. Why is it? Some people put much burden on the church when they die. Let me be honest with you. The same thing, if you remember the story of that prophet I tells you, why was the children about to be taken? Because they don't have life insurance. Do you know when you have life insurance, that life insurance, see, how much is it? 10 pounds, £5.70 per month. It is amount for burger, amount for McDonald's, amount for sweets you can easily, there's something you can even throw away. But do you know that any time that you pay this thing, if anything happened to you, you pay off, it helps to pay off your mortgage, it helps to pay off the tuition of your children. They will be happy with you. They will say, thank God for the life, you've left us something. But do you know that is why sometimes in this place, when some of us even die, the burden on the church, you begin to see, we expose our family. The exposure, we expose our family, then the family we begin to see, let's go fund me on this thing. Please, anybody who can help this family, we want to repatriate the body, we want to do this thing. It's just like, it's so shameful. And the church begin to run around and begin to make an offering. If a new member comes to the church and begin to see, we are making offering, but do you know that you cover the shame of such family when you, as this thing, pay for these things? You pay for your funeral, you pay for your this thing. Only how much? That is why we say life insurance. If you don't, brethren, I'm not talking about the one, because there are some companies that say life insurance. That one, they covers you when anything happens to you. If you die, that one is within themselves. They can give you small, just based on for their own distinct benefit they can get from the insurance. But I'm talking about your own personal life insurance. If you die, anything can happen. I'm not praying that we will live our life fully. That is God's command, and that is God's word for us. But the thing is that we have to be wise. We remember the story we read last week, that the man of God died, the children, the debt. Have you seen the debt we amounted? They wanted to take the children away. How can such children now say, well, I want to serve the God of my father? Not possible. They will be disappointed on the man. But these are the only way you cover the shame of your family, even to help the church. So that when you die, nobody is thinking about, let's just do an offering for this family. Let's just do this thing. But it helps to make sure that every credit card, outstanding car loan, everything is cleared when you have this. There is no time, and finally, there are also investment instruments you can do. You can hear about people going into cryptocurrency. That is why I say the time you gave me is 1 hour. you want to hear everything about investment. You want to hear about cryptocurrency, want to hear about shares, you want to hear about stocks. It is not possible for me to finish this, because I wish I would have given you a tips if you are amongst the people who use all these stocks and all these platforms for trading and all that. But you know, there are always ways that you can use it to make money. People make money, but I have to tell you, cryptocurrency and all that, do you know that they are not regulated? So that means it is a high risk. So your money can come in and go at any particular time. Even stock and shares, when you are trying to buy stock and shares, how do you buy? Let me tell you something. Some people make money through this, to be honest with you, but some people also lose money through all this. That is why I said I don't have enough time now to talk. I would have begin to break this one by one. Each of them, I begin to break each of them one by one, stock and shares. How I would have told you, how can I buy shares? How can I know which company is not going to fold if I buy shares for them? How do I know that this company is not going to fold within 2 years or 3 years, immediately I buy the shares. Yeah, you look at maybe financial statement, it looks so viable, it looks so efficient, but before you know it, you hear the next day that the company has folded. How do I invest? So that is why I said there are a lot we can talk about. There are a lot, but I'll leave it here. Just there are stocks, bonds, cash, annuities, foreign investment options, which are the high risk, mutual funds, hedge funds, which is the highest risk, real estate, the rest. There are a lot. We can go on and on and on. There are investment, a lot of investment, but there is no time for us to go into this. But I believe you must have learned something. So I'll leave it up for any questions now.
I think we'll learn more through the questions. If we give ourselves about 20, 30 minutes of question time, I don't think, let me use the word, no old is bad on questions now. I think we'll bring Pastor back. Don't worry, we'll bring him back. He's not going to run away. But I don't want you to hold back. Let me just open the questions by, maybe, I know some people are thinking, some people here already own their houses, maybe some don't. So for those that have houses, I think one of the questions would be, we know property investment, not buying a house for yourself is expensive capital outlay. How can people raise money if they want to invest in property? Not as in owning a house, if they already own a house, but they want to start investing to buy properties. What are the ways they can start raising cash to do that? Buying a £50,000 house, 25%, what are the things they need to look forward to raise that kind of cash? And is it 25% minimum or what? So that's just for buy-to-lets there.
Okay. Yeah, that was what we started last week. You see, we are coming back to it again, because that is why, when we are looking at it, people are just like, I want to talk about investment. But the thing is that was why we started. You have to first look at what are your assets, what are your liability, what are your expenses, okay? And then bridge, if you remember, that was a word I used last week, bridge the income gap. Bridge the gap. And how do you bridge the gap? Save. And the question now is, how can I save? Is it not, sir? That is what you ask. How can I save to buy all these things? And I've given you one thing that we do, just like gather, because one is that to save is difficult in this place. But the thing is that if you have, just like what I mentioned earlier, if you can have people that it's accountable, sometimes anything that you just like says, let's say 10 people, we says every month, 500, 200. Calculate that amount of money every year. When you do that, that has been another way. You have already saved something, okay, at the end of the month. And then what do? There are some people, you can get that money. That is what we call fixed deposit. I said there is a lot of things that we done with fixed deposit. What is fixed deposit? You can go into the bank, not all these things that we do with the bank. We just get money and just give the bank. The bank is using it for borrowing people and getting interest. So fixed deposit is, you tell the bank that already you are putting this money in fixed deposit. They will tell you the percentage of it. And the percentage of it could be 1%, it could be 2%, meaning I am not going to touch this money in the next 1 year, 6 months, 1 year, 2 years. When that money comes, there is a building that the interest, what some people do is they roll it over. They will not take the money. They will roll it with the interest, and the things continue to build. That is the second part. There is another third things that people do is they invest in a fund, a property fund. That is what we call property fund. I said that is why I said there is no time for us. We have looked at the investment instrument. Property funds could be, but there is danger in those property funds, because property funds, either sometimes it is difficult for Sometimes before you can take money from the property fund, you have to queue for 6 months. So there are property funds, for example, you have all these providers, pension providers. There are not only pension providers, there are finance providers, and you go to them and then tell them you want to invest. And when you tell them you want to invest, any money you get, it says, okay, I am putting money in this particular property funds. And when you put that money in this, it can go up, it can go low. So all these things, the way you can save could be having people around you trust that you can do that, fixed deposit, and as well you can invest in property funds.
Thank you, sir. That was actually very clear what we can do to save money for our investment property. I don't know if anybody will ask this one, but how can people that want to build their credit, you talked about credit rating from, especially people that are just coming to the country, or people that would like to buy their first house very soon or something, and their credit rating is still at 200 when Experian is wanting 999. How can people build their credit rating?
Okay. You want to build your credit rating, all you need to do is, number one, possibly the people that you've defaulted, okay? Have an agreement with them, go back to them and tell them and says, I know I'm owing 1,000, I know I'm owing 200 pounds. What I have is £5 to pay. If, believe me, they must accept. Why I say they must accept is because the credit rule is now based on affordability. Because every time you want to speak to them, they will tell you, okay, if you're giving us £5, are you sure that you are paying your normal bill? Because they will always ask you, are you sure that if you're giving us this money that nothing? You say, yeah, that is all I can afford for now. Anytime you do £5 for each of all the defaulters, trust me, your credit thing will always begin to increase. But the problem is when you don't talk to them, when you hear their call and you avoid them, you don't enter into an agreement with them, that becomes a problem. Secondly, there are some credit cards that can help you. But what I don't advise people to go into that is because if you are not able to control yourself before that puts you into that particular problem, how am I sure that if you take another credit card that is called a credit builder card, that you are able to fulfill that? So that is where I always say I am skeptical about that particular one. But the one I love so much is get into agreement with all their defaulters. Tell them how much you can. Even if it is £1, they must agree with you.
What about if the person has no issues, but they just arrived in the UK, they're willing to buy a property in 3, 4, 5 years' time, and what do they need to do?
Once you arrive in the UK, the main thing is that, to be honest with you, after 6 months, you have a right to get a credit card. Get a credit card. So when you get a credit card, so what do you do with a credit card? Is when you get a credit, it can be 100, it can be 200, it can be 300. So already there have been a credit built for you. So once that credit has been built for you, make sure that you are maintaining that. With that particular this, you already building your credit. Secondly, again, is all the how do I call it? I'm trying to look at the name. All the if you have television or phone bills and all those things, and you are maintaining all this, it's also you're building your credit as well. So that is if you're maintaining the bills that you can find out that actually that is the next thing. Secondly, thirdly, could be another thing is try as much as possible to register with HMRC for the house where you are. Call them to let them your visibility of so that you can as well know that you're in the electoral register. If you're in the electoral register, that helps you again to build up your credit rating as well, because everything, if you're in a place, they already know that you're in this place. So that is a very massive boost.
Thank you very much, sir. Yeah, I like the electoral roll one. That's very key most times. Let them know where you are staying. Your name is on the electoral register. I think that one's very, very good. Please, anybody who has a question, please don't. I'm just helping to just fill in some questions. Yeah. So yeah, Sister Valerie, yes. If you put your name on the register, you want to. It's very good. It boosts your. And I think as it was said also, telephone. What was it?
Yeah.
Mobile contract.
Mobile contract. Yeah.
All those little contracts are very good to maintain. Don't enter debt with it. Any question else, please? If you have any questions.
Sorry. Good evening.
Good evening.
Good evening.
I have a question. I want to ask, if you have a loan like in Nigeria before you come to the UK, can it affect your credit rating in the UK?
Not at all, my sister. There is nothing about, there is no legal binding between Nigeria and this, unless based on loan or financial commitment. When it comes to loan, here is quite different. Nigeria is still different. So there is no way. You found even in Nigeria, how many people have done a credit report in Nigeria before? I came from Nigeria. There is nothing like I want to buy something. There is a credit report in Nigeria to show where have I borrowed or not. It doesn't happen. But here, that is why even if you want to buy clothes, to buy anything, even online, you see they always ask you your name, everything. That is your details is everywhere on the record. So, but it doesn't happen in Nigeria. No, it doesn't. There's no record here about the loan in Nigeria.
Thank you, sir. Any more questions? Just once, you mentioned something about bank repossessing houses, and we can how do you know exactly that that's a repossessed house so that someone can go? You know, is there a website someone can visit for repossessed properties?
Even if you type now and says on Google and says repossessed house, you will see many, and then you can see even in a bank, you can as well find out each of all these mortgage provider. They will tell you, they will say, you can then say, your some say, let's say Halifax now, you now says repossessed houses for sale. You will see some that will come up that they are trying to sell in every particular area. So just like the way you search for a house you wanted to get for mortgage, the same way you can still see there are some of the houses they repossess and then looking for a potential buyer.
So it's available to find online. Okay.
Yeah.
Okay, very good. Thank you for that. And where in Glasgow can we get something for 50K?
I said Glasgow is what I mean by, even in Edinburgh, is cheapest, mostly Glasgow is the cheapest area where you can find. One, another thing you just have to think about is the crime rates.
I won't live there now. It's not me that will live there.
Which is, you get what I mean, which is something that you don't live there. But the thing is, like my cousin who bought in Glasgow got the house very close to the University of Glasgow. And students, your son said, he has never ever lacked. People feel he doesn't even use it, he uses the distance. I'm telling you, you will even find something less than. And let me be honest with you, again, is that if you look at in England and look at some other places, you found, check out the high risers. If you check out the high risers, you found that the amount in those places is very, very, very small for you to get high riser. And what again would that do? You found that mostly for all these refugees that come, because you have given it to the council, you have given it to this thing, the house is their house, but they are using it for something. And what you know is money is coming in.
There's a question that I think we've talked about it, is when you find the repossessed house, you just follow, and you have gone to view. You follow the normal process of getting it, buying it. Just follow the normal. You go and view it, and then you arrange your finance, and then they will sell it to you. But it's the same thing, but it's just that repossessed houses are always cheaper than going to buy a normal.
Yeah.
The normal house
Because
is 60K. Repossessed
you can't run two houses, you know what I mean, with a high amount of money, because you just there are a lot of things to use your money for. But the thing is that you cannot run this thing. It's just a quick way for you to have at least a scattered property that is working for you and bringing stream of income, rather than I use 200,000 to buy my own house that I'm staying with. Also use 200,000 to buy. It doesn't make sense. I'm not living in that house, so it doesn't make sense.
Thank you very much, sir. Please, anyone, any more questions? Any more questions? Just quickly on the screen that is on here, it's talking about bonds. All these premium bonds. Can you just maybe in 5 minutes? I know many. Can you just help us just touch on bonds? Because I know it is, most of them are government bonds, they are premium bonds. Just touch on it also, so that people can just have that knowledge of what bonds are, please, sir.
Yeah, it's mostly bonds are it's just government that provide mostly for that. Then if you want to invest, if you come to financial advisor, the first thing the financial advisor do to you is to do a temperature check. And what is that temperature check? Are you a high risk taker, or are you a medium, or are you a low? Mostly, if you are a low risk taker, they will always want to ask you, say, okay, you want to invest. That means because you're a low risk taker, you just don't want your money to go, oh, you're careful about your money. They will ask you to invest in bonds. So government bonds are something like cash and annuities. All these things are just mostly for the low takers. Because sometimes I remember there were times when mutual funds hit people, hedge funds hit people lost a lot of money. But when you talk about government bonds and cash, even if anything is changing in the whole world, you must get your money back. Let's assume that everything has changed, interest rate or inflation has increased, that nothing but the thing you are guaranteed is that your money will be back. But the thing is that the interest you get from them is very, very low, because it is not regarded as a high risk funds.
Yes, sir. It's not. So can we get, what's the return? So just for people here, as an investor, what's the minimum? The interest rates are 0.05.
That's it.
So what should we be looking at for a return on investment, or maybe a return on capital invested? So I know properties bring in about, if you are savvy with property, you get 10% minimum. There are some lower on returns on investment. So what is bonds like? What should we be aiming for as we are here, safe investors? What should be our minimum return on invested capital?
Is 1% to 5%.
We should be looking for 1% to 5%. Okay.
To 5%.
Minimum. Yeah. Oh, perfect.
Yeah.
Perfect. Yeah. Is that the same thing that bonds return? The bonds return 1 to 5% or more?
Yeah, the same.
Oh, it's the same. Okay.
Yeah.
Please, any questions?
So, but when you want a variable, or the one that is variable, that means it can go up to more than 25%, more than 30%, is when you invest in this, what we call hedge funds.
Okay.
Or options. So that is the one that, unless you are a high risk taker, that you go for all those ones. You can hit the money at any time, but there are times when it comes, if you want to lose it, you will cry. When the money is, you lose the money.
Yeah, okay. I don't like options. It's too risky. By the time you look at it back, I like it. By the time you look at it, as well,
yeah, that's it.
But it's good. It's high return.
It's variable. That is why I use it. It's variable. So
I know. And to be honest, options are not common in the UK. It's more US based stuff.
US based, yeah.
So I think
it's mostly
yeah. If you want to invest in the UK, you need £25,000 in an account. For Schwab and some other accounts. Only a few companies in the UK do it. I think Saxo Bank do it, but it's not. If you're not savvy with investment, don't do it though, please.
No, that is why you see me. I didn't want to talk more.
Please, any more questions? Any more safe questions? So don't mind the options, or any more safe questions. If any question is not too hard to ask, please. Yeah. There's no foolish question. Let's just maybe 2 more minutes and then we'll be closing down. This is, please, if you've gained something, you just want to raise your hand. Let's just see some feedback that this has been helpful. Please, if it's been helpful, can we just raise our hands? So I just want to get some feedback that this has been helpful. You've gotten something. The Nigerian one. Do you have any contact in P1 that we can?
Yeah, I do.
Okay.
I do. Yeah. I do.
They don't want to ask. Does anybody need contact in P1? Who needs contact?
No, you see why I always leave it for people so that it doesn't look like, you get what I mean? I want people to do a research on themselves. You know what I mean? Based on if you're in Lagos or wherever you are, you can easily ask your brother and says, please, can you go and check up this? You know what I mean? They are there. They know more about, they will see the land, because that was what I use with other people that have just invested with them. I'm not a me, I invested in them. So they went, find out, I said, send your people just without me knowing, let them go and see the place, see the land and see everything, talk with them, and you are sure, let the person give you a feedback. Because then that means I didn't know about whatever that was going on. So let the person give you feedback. And when the person gives you feedback, then it makes it easier for you to say, okay, I decide I can do this and I cannot do this. So that is mostly the way it works.
Thank you very much.
Thank you. So I want to ask a question.
Go on, Ma. Go on.
I just wanted to check, what is the bank disposition to giving mortgage towards buy to let? Are they quite open towards it, or are they, do they ask for more requirement for buy to let rather than just normal mortgage?
No, it's just something I think I mentioned it here. I mentioned to say that first thing is, before you do it, before you go to them, what do you do? See the thing that says, what you do to do, check your eligibility to apply. So there is eligibility, that is check first of all, your eligibility. Each particular bank, each particular society, that for you to do a buy to let, there is always a mortgage calculator. So first thing is just do this eligibility, just like the way if you want to get credit card, they will tell you there is this is a soft touch, no credit check, it's not going to reflect on your credit check and all that. So first thing is that count the cost, first of all, check your eligibility to apply. And then next thing you do is find out how much you could borrow. When you are going to them, you've already have done your credibility check. You've already, first of all, then know how much do I have. And then third thing you have to, because these are the things they are going to probe you. What is the cost of buying? What is the cost of running it? Because you already have your house. What is the cost of maintaining it as well? You understand? Because they now know that this one now is not the house where you are staying. You are not going to say, okay, I am buying this thing. They now found that actually you are even struggling with where you are. You want to get out. So they would need to probe you on what your stamps and how are you going to run it? How are you going to maintain? So that is why I say mostly buy to let mortgage. You see, you have something to tell them and says, I am going to hand it over to, you know what I mean, to this, because they will ask you, what about the void period when nobody is there? What are you going to do? So you are not telling them and says, because of those void period when you are not sure of this thing, that is why you are handing over that property to the council and the housing association. And you, first of all, before you go to them, you must have, first of all, spoken to the council or spoken to the housing association and said, if I get this thing and all this, how much am I going to, how much is the rent? How much is the, so you have all these things. So when they're asking you questions, they know that you've already done your feasibility study. And it is easier for them to say, okay, yeah, this person knows what he or she is talking about.
Yeah, I'll just add to that. If you are buying for the first time buy to let, they will check you well. They will check you because of the they will check you. I think the interest rate might, for a first time person, might be up to 2.99. So they will check you. But yeah, and then 25% minimum. They won't accept anything from you less than 25% for buy to let. But it's, as long as you have 25% and you know you are okay, they will let you buy. That's I think it's a very nice question here. Very nice question. I like this question, and I'll ask her. So because everybody knows that the inflation is rising very fast due to what has gone on with COVID and things like that. And we have heard rumors that the Bank of England will likely increase interest rates, even though November they said they would do it, they didn't do it. But I think before February, they will increase the interest rates. How does that affect our investment plans and our shares and bonds? What's the impact of increase of interest rates on investment? I think that's the question there. What's the impact? Now it is the lowest ever. We've seen when interest rates in this country went to 7% about many years ago. So when they begin to raise interest rates like that, what's the impact on investment? Shares, bonds, buy to let, savings, and things like that. Okay.
Thank you, sir. Another thing is, this is bringing us to last week. Because why I am saying this is mostly how many of us, this is what I do. Anytime they read the budget, I go back and begin to look at how it is going to affect me. And you know that the budget they have read, just like as you said, things are going to be harder. And the question is, how am I going to plan and how? So if I read everything about how this thing is going to affect me, what do I need to do? I need to save more to bridge up the gap for the inflation. So if I am saving 50 pounds, let me tell you, if I'm saving 50 pounds, I have to increase it to 80 pounds. I have to do, that is why I say count your current expenses and this thing, look at the gap and then see how much, what do I need to cut? Because that is taking us back to financial planning, because you need to understand that every year things are getting more tighter, and as a distance, so you are going to be looking at what am I going to save to fill up the gap for the inflation. Hope it does answer. So it's just, if you have to increase your saving, you're mute, sir. You're mute.
Yes, when interest rates goes up, it means that savings account, if it goes up, you get more for your money back. So I think there won't be lots of borrowing. People will find it difficult to borrow. It will be difficult to just get on the market because there will be tough money there. They're cutting the money in circulation. So as Pastor said, yes, there will be investors can be savvy. You can save more because your interest on your money in your bank will go up, and it's just to curb the amount of money in the cycle of things. Oh, it's been a wonderful session. I don't know if anybody has any question. If not, it's too big. We don't want him to go. I'm sure we don't want him to go. There are lots of questions. Don't worry, if you need the P1 stuff, I will get the number or contact, and I've quickly gone on their website too, and I can see that here you can actually make 30% of your money quick. Quick money.
Thank you. I'm telling you, quick.
They're laughing. I see somebody laughing. So if you need to contact, I will get it for you because I'm going to have it and I'm going to contact, and I'm being honest. If you want any support, more support, please let me know, and we can always be there to support.
I want to ask a question about the bi-monthly mortgage payment we talked about last week.
Yeah.
I haven't spoken with the bank. The first thing, I expected that they will push back, but I am a match for them. So they didn't have problem. But there were things that they said. First thing is that if they change it, that the interest rate will go up. Is that supposed to be?
No. That is why I said is the way they are trying to discourage you. If you remember what I said, this is, they didn't push back, but they are using another way. They are using another way. That is why I told you that. One thing is that they will always push back. But this one, they didn't push back. They just talk to you nicely by then trying to tell you, why the interest rate is supposed to be the same. The only thing I'm saying is I am paying 2 weeks.
Yeah. You have fixed the interest rate for 2 years, 5 years. They can't change it. So I'm surprised they're able
That's
to.
the thing. No, that's what I'm saying. So it's just an invariable way of pushing back.
Right. I just wanted to, I didn't want to say, okay, and then they will say you agreed to it.
They can't change it.
No, they can't change it.
You are breaking up, man.
Yeah, I think.
You are breaking up, man. Can you say that again, man, please?
They cannot change the interest rate, yeah. And then the other thing they said, and then the other thing that they said, can you hear me?
Yes, ma'am.
Let me try again. They said the second thing they said was that they cannot set up direct debit for 2 weekly standing order. Can you hear me?
Yeah, yeah.
So
okay, yeah, that is what I said is always, this is a soft way of trying to push you away from it. It's a soft way of pushing you away. So is just trying to tell you that they don't just want to do it for you. I told you that
you can set up a standing order for yourself if that is what you said. I will go ahead, I will set up standing order, and then it won't fail from your hand and to go straight into the account. To be honest, to be honest. So, I think it's just subtle ways of trying to push back. To be honest. Okay. Any more questions? I believe if you agree with me that we should bring Pastor back, please raise your hand if you think we should bring him back to talk about some more details as we round up tonight. If you think we should bring him back, let me know. And as we want to appreciate, can we all just appreciate Pastor for a wonderful time? He has been a blessing. Thank you. I can see 2 hands up, and I would want to bring him back also, especially. And then we'll make it harder this time. We'll not just talk financial investment. We'll bring him back for some we'll look for a topic that will be too deep, that you will know that, okay, maybe cryptocurrency, we'll bring him back and discuss crypto that everybody is running away from. And Bitcoin, and then we're going to have Bitcoin wallets. Don't worry.
No, yeah, you have to buy a platform.
Exactly. So please don't worry. We'll bring you back. So can we all just unmute and clap for Pastor and say thank you very much. Thank you for the wonderful time. Thank you for the wonderful time today. Thank you very much.
Thank you so much. Thank you.
If you have any question for him and you cannot just send it to me, it will get to him. Thank you very much, sir. I'm going to call on, well, Mommy Zion has been very vocal, so I will ask her to give the vote of thanks for being very vocal. I hope your network is good now.
Thank you very much, sir. Thank you for.
Thank you, man.
It's an honor to be able to do that. Man of God, we're so glad that you were able to do this for us. Pastor Precious, thank you very much. This has been not just an eye opener for some of us. It's telling us that we're not locked down. There is way out, and for that we want to say a big thank you to you. You might have thought that what you have done is just for us that were listening to you, but you have actually set free generations. For some of us, our children will be glad that you did this meeting with us today. So, sir, we are so grateful on behalf of Chapel of Light, Pontefract, Wakefield, we want to say thank you very much, sir. God bless you real good, sir. Thank you.
Thank you, sir.
Everybody, can we just put full screen reaction for Pastor Precious, please? Everything you can do, clap hands, love heart, anything that we can do.
Clap, thumbs up.
Let the screen go. Let it go full light.
Thank you. And thank you for coming. Thank you, everybody that came. Thank you for coming, and the Lord bless you all in Jesus' name.
Thank you.
Pastor, thank you. I'll catch up with you.
No problem. Thank you so much. Yeah. God
Have a
bless you.
wonderful
Thank you,
service tomorrow.
everyone.
Have a wonderful weekend. Bye.
You too. Bye. Bye.
Hello, everybody. Hello.
Bye-bye. We have all gone. What are you doing there?
Hello.
Hello, Sister Annie.